Hello and welcome to the latest Renegade Investor Report. Now, I have to tell you, this one carries an official health warning because I'm going to share a handful of topics with you today that suggest to me that the current, what we might call the old financial system and financial world is rapidly falling apart and could be about to crash and burn. So buckle up your safety belts, put on the crash helmet, and let's get to it. Now, just before we get into the meat of things, just to remind you, the Renegade Investor Report is brought to you by Property Connections, which is a way of investing in joint ventures in property development. If you're keen on doing that and you have six-figure funds liquid, then do get in touch through propertyconnections.org. And also, by the time you finish watching this episode, you'll probably think it's time for you to escape somewhere else. So you might want to take a look at Monaco, and you can see all the properties available on and off the market in Monaco at monacoestate.com. So thank you to them. But I have to say that the more I see of what's going on around us in 2021, the more I think that the system is crashing and burning around our ears. And of course, the huge question for all of us as kind of interested and hopefully savvy investors is, what are we going to do about it? Because the chances are the vast majority of people, including most of your family and friends, don't even know this is happening and probably would think it's all a bit boring and they don't really want to get involved. But this, to me, what's going on is seismic. And I really think that, we need to be on top of this, and we need to do whatever we can to prepare for some really choppy waters ahead. So let's have a look at what I'm talking about. Now, you might like to search on YouTube on this very platform. Just put in Rishi Sunak CBDC video, and you'll see a short, it's only about 3 minutes video, and you'll see the sharp suit and the shiny teeth. And he is pleased to announce that we are looking seriously, along with other members of the G7, at central bank digital currencies. Now, this has always been something for the future. China's already well advanced in England, but Rishi has come out in his 3-minute video and announced that it's official. They are setting up a working party to look into this with a view to implementing central bank digital currencies in the video, and things which, I personally, I think we should kind of draw on some kind of red horns here, because I think he's the devil incarnate for some of the things he's actually saying in this smooth, business-like, professional way. I mean, he comes over very well. He sounds and looks very credible. But what he's saying, when you break it down, is really, really dangerous news. And also, it could even impact some of your existing investments, certainly over the next few years. It won't be immediate. They're talking about this taking a few years to come to fruition. But what he announces in this little video, 2 or 3 things that should really make you quake in your boots. The first thing is that they're obviously seriously looking at central bank digital currencies for Britain. These would be issued directly by the Bank of England. So this means that the role of the commercial banks in creating money disappears, because now at the moment money gets created when commercial banks create loans. They don't actually have that money. They just hit the mouse a few times and create a few noughts on the end, and hey presto, there's a £500,000 mortgage for you, sir, and you'll spend the rest of your life paying it off, and they'll get the benefit of all that interest. Now, if your funds, if your bank account and your money is directly with the Bank of England, what role do high street banks play now? What's the future for the Barclays and HSBCs and Lloyds of this world if all of us have accounts directly with the central bank? This is a massive, this is earth-shatteringly different. This is a complete revolution in the structure of the financial system. And it's announced in a 3-minute video on YouTube, with no kind of consultation, no kind of speaking to the British people as to whether they actually want to have this or not. This is a fait accompli that's being announced. So the first major plank of all this is Rishi confirming that this would be directly issued by the Bank of England and not by the high street or commercial banks. The second thing we should be concerned about here is that there's what's been set up to look into this is a joint working group between the Bank of England and the Treasury. Now, a cornerstone of the old financial system was the independence of the Bank of England, that it could effectively manage monetary policy without interference from politicians. Now, there was always an element of naivety around that. Of course, politicians are going to do everything they can to try and influence. But what I think we see here as we move towards central bank digital currencies, the role of the central bank effectively becomes an extension of government policy. And when you look at how central bank digital currencies would work, remember, they're not notes and coins, they're just lines of code. Those lines of code can be controlled in all sorts of ways. And once you have no independent arbiter, no independent body that is separate from the government controlling that policy, then you are at the mercy of those elected politicians who could be bad actors, who could be fiscally loose, shall we say. I think we have a certain amount of that going on at the moment with a supposedly conservative government. I've said in the past that Rishi seems to be the only one left in the cabinet with any sense of financial discipline. Well, even maybe he now is being overruled by everybody else. And so, we're going down this road. So I think the second thing is, first thing is these money will come directly from the Bank of England. Second, the Bank of England's independence seems to me to be basically gone. We're seeing a similar thing in America. Look how the former head of the Federal Reserve is now America's equivalent of the Chancellor of the Exchequer. So you've got Janet Yellen speaking to Jerome Powell, no doubt, on a daily basis. How much independence and separation is there? So once you start losing that independence, then the entire monetary and financial system now becomes, if you like, the bailiwick of the elected politicians. You look at a similar thing in a dictatorship like Turkey, where he's getting through central bank governors faster than we're getting through housing ministers, because he believes that high interest rates cause inflation rather than reduce inflation. So he wants central banks to keep reducing the interest rates, which of course they know would actually increase the inflation issue. But because the president is financially illiterate and he's got all the guns and the ammunition, he gets what he wants. So he keeps firing them until they agree. Boris has kind of had a similar approach to his cabinet if you look at some of the reshuffles, but I don't think anyone actually died, but it's not been far off that. So that's another thing we should be concerned about. Now, what would this actually mean for us? Well, the observant ones amongst you will notice that there's only one letter difference here between Bitcoin and the name I've just dreamed up for Rishi's new central bank digital currency, Britcoin. But there's actually a world of difference between the two. Bitcoin is a private currency that you or I own in our own wallets, in our own exchange accounts, wherever it is. We control it. We know what we're doing with it, and we have a degree of privacy and anonymity in how we go about it. We can save it, we can spend it as we see fit, regardless of anything else going on around us. It is entirely under our personal control. It's also in finite supply. You know, the big argument around Bitcoin is there's only ever going to be 21 million of them, and it's going to take us until the year 2140 to actually mine all of them. I think we've got 18 or 19 million in circulation at the moment. As I record this, it's just reached a new record high. It's just gone over 50,000 sterling. And, you know, many people are predicting it going a lot higher. And certainly one of the attractions of it, one of the reasons it's being called digital gold and so on, is that it's being seen as a store of value, and it's seen as almost like the antidote to quantitative easing and the money printing that we've seen in steroids over the last 18 months. A Britcoin would be controlled by the government. Don't even forget the Bank of England now. In Bank of England independence is history. It's gone. That part of the financial system no longer exists. The Bank of England will do pretty much whatever the government tells it to do. So you now have effectively a government currency, which is controllable as code. And a lot of people don't get the difference. Obviously, a lot of us virtually don't use cash today. We use our debit and credit cards, and we use contactless payments. A lot of places, of course, stopped taking cash during the pandemic, and are even continuing that policy now when there's no need for it, because it's easier for them, and they don't have to pay the banks when they deposit cash and all the rest of it. So cash is diminishing a lot from our lives, but there's a huge difference between paying with a card through a bank and through a clearing system and so on, versus a central bank digital currency where you are effectively using something at the whim of the government. And because it's under their direct control, not under Barclaycard or MasterCard or Visa, this is under Rishi Sunak's control. So he can then put rules around that. And there are all kinds of rules you can put around it. Because it's just computer code, if you've looked at anything like the smart contracts you can use on the blockchain, you can specify anything that you want in there, and it will implement that for you on that platform. So, for example, if you wanted to issue benefits of some kind, this could be universal basic income, it could be the furlough payments we've seen during the banana syndrome. You could actually put a spend by date on them, for example. So if you don't spend it by the next 30 days, you lose it. So you can stimulate the real economy by forcing people to do something with their money that they may not have wanted to do themselves if it had been under their personal control in the way that, say, Bitcoin is. But of course, it can get a lot more sinister than that. What if you're a person who is going on a platform like this and criticizing the government? It'd be a short step to start putting some kind of restrictions on what you could spend your money on. Maybe next time you want to book a train fare or an airfare, this is what they do in China with their social credit score. If you've been a bad citizen for whatever reason, they can cancel you effectively, just like they do on social media. So they could say, well, actually, we're not going to allow you to buy that EasyJet flight to Portugal. We're going to somehow, there'll be an error appear when you try and make the payment. What you actually don't know is that Rishi and his gang of people sitting behind the scenes there have set some flag in your Bank of England account that means you can no longer do certain things with that money. They could also obviously directly take tax. In fact, the HMRC at the moment has the ability to take money straight out of your account. So it'd be even easier for them to remove that, fines, anything else. So the bottom line is, with a government-controlled digital currency, you have no control anymore. You are a passenger in this. They can do anything they like to you and your money. And as you'll see in a few minutes when I go into what's happening in America, some of the proposals by people who are actually going to be in positions of authority are scary beyond belief. I mean, really, we are getting to a point, this is beyond anything George Orwell could have conceived in 1984. This is really scary stuff, and it's happening in supposed Western democracies during this decade. I'll tell you again, this is the most dangerous decade of I can recall in my lifetime, and most people will, of course, let this just wash over them. What will happen here, I guarantee it, is as soon as they announce Bitcoin, they'll say, set your Bank of England account up today and get 100 Bitcoins in there free. And 99% of the population will say, oh, yeah, great. I want some of that. Free money. Yeah. It's a bit like these betting platforms that give you your first £50 free. I wonder why they do that. Perhaps they're just very nice, very kind people. Not that they want to lure you into something where they know statistically that they're going to cream you for so much money over the next few years that 50 quid is nothing. Here, they'll do the same sort of thing. Have some free coins. Now we've got you by the short and curlies. Now we can do whatever we like to you. This is sinister. It is evil. It is the end of our personal liberty as we know it, because if you can control their money, as that Mr. Rothschild once said, everything else follows from that. So I do believe that this is a very dangerous development. I hope you agree. I hope you, as a viewer of this channel, are on the wavelength of why this is so dangerous. But I guarantee most of the people you talk to, they have no idea about this whatsoever. Okay, let me move on to my next topic. Central banks again, I'm afraid, but this time central banks getting a bloody nose. And this is in Australia, where they tried a policy of yield control in the short-term government bond market. And they were trying to keep the yields capped at 0.1%. And what you see on the chart here is how much money they spent trying to do that. So back in March, 1.78 billion Australian dollars. In June or July, another 4 billion. September, another 1.15. October, 5 billion. November, 2.5 billion. Earlier this year, 3.3 billion. They've finally just given up the ghost, and look what happens when they stop trying to control the yield curve. Zoom, up they go. Now remember, bonds and yields, bond prices and yields operate in reverse. So if a yield's going up on a bond, it means the price is going down. This is a fundamental difference that a lot of people still don't get between bonds and shares. If the dividend on a share goes up, usually the price of the share will go up, because what you've got is a more valuable income stream from that company. So increasing dividends are a great thing. And there are companies out there who've increased their dividends consistently over many years. And they're often quite highly priced, regarded as blue chip companies because of that. But with a bond, when it's first issued, it has a fixed coupon. It pays a certain amount of money. And the higher the price of the bond goes, the lower that actual amount of money is as a percentage of that price. So, something might start out as a 5% yield, but as the price goes up and up and up, suddenly that same amount of cash is now a 1% yield or a 0.5% yield, or even negative. So that's what they've been trying to control here. Now, I think it's true of treasury and bond markets across the world. If the markets had their way, the prices would be a lot lower and the yields a lot higher, because what you're doing is locking up your money for a period of time, could be 2, 5, 10, 30, even 100 years. Some countries do issue 100-year bonds. But the problem is, if the yields are at 0.8% or 1.2%, and we all know inflation, even government manipulated inflation figures are heading to 4% in Britain, over 5% in America, why would you want a 0.8% yield for the next 5 or 10 years if you're guaranteed to lose money? The answer is yield curve control. And that's what the central banks have been doing. It's part of their financial repression policy, which absolutely kills savers, because obviously if you're relying on these things for income, you suddenly need a huge amount of capital to generate a given amount of income. And one of the upshots of that is when people have been doing pension transfers recently, because these bond yields have been so low, the multiples of what you can get to achieve a set pension, say 25, 30,000 a year, people have been getting 25 and 30x multiples. So they've had enormous, hundreds of thousands, maybe millions of pounds as transfer values in order to buy enough bonds to generate that income, because the yields are so low. So what we have here is massively manipulated bond markets. And there comes a point where, especially those that have been trying yield control, this is a 20-month experiment that the Central Bank of Australia has been trying here to keep these bond yields low. And they've spent so much money doing that that they've given up the ghost. The result has been the biggest spike in yields since 1994. That is 27 years ago. So this is enormously significant. Basically, they've said this experiment has failed. Other central banks will be watching and learning from this. Now, obviously, similar things have been done in Britain and America. What's really happening there is more direct monetizing of government debt, so that the Bank of England is buying the government's bonds in order to fund all the stuff that Boris and Rishi are spending on, similarly, as we'll see in a moment, in America. So they are artificially keeping yields down because they are the kind of buyers of last resort of these government bonds. So the question for us as investors is, where are we in terms of our own asset allocation? Is your pension invested in these very expensive, very low yielding bonds? Has your financial advisor put you into the classic 60% equities, 40% bonds portfolio that most people are in? Or indeed, as you get older towards retirement, they start increasing the bonds and decreasing the equity so that you might have even higher exposure to these bonds. My concern right now is that as soon as they start not normalizing interest rates, I mean, that would be 5%, which would destroy the world's economy completely. But as soon as they start even the slightest interest rate rises, bond prices will fall. They could crash, who knows? I mean, this is certainly an indication of the kind of pent-up reaction of a market to central bank manipulation. So if you've got a significant exposure to government bonds, you're in a very fragile position because all the central banks are starting to get a bit more hawkish now. There was a big surprise when the Bank of England did not raise rates at its October meeting. Everyone had priced in at least I think a 10 or 15 basis point increase. It didn't happen. And I think they're genuinely surprised at the negative reaction. The markets were ready for it. And, all these markets are looking at the future. That's why you often get a disconnect as to where the economy might be today. They're looking through that to the future. And everyone that had money in the market thought interest rates were going to go up in the UK, and they did not. At a time of very rapidly increasing inflation, they assumed there'd have to be some action from the central bank to try and offset that overheating economy, but there wasn't. We have to assume it is going to come in November or December, but again, that's all to be seen. But what happened in Australia is amazing. They had said, we're not going to raise interest rates until 2024. I mean, how on earth they can think that with confidence that they can predict things 3 years out in this kind of climate, I really don't know. Even now, after this route, they're saying 2023 for rate increases. So you got Australia saying nothing for another 2 years. Bank of England, I suspect, will do one in the next 2 or 3 weeks. So there's clearly some difference of opinion between these guys. But yeah, certainly it's kind of anyone else thinking of experimenting with yield control. I think they'll certainly give up the ghost in this. And shorter term bond yields have been spiking around the world recently because everyone's concerned about inflation. And so you can't have continued inflation at this level with continued bubble in bond market prices. And bond prices have been a one-way bet for 30 odd years now. Yields have gone down and down and down as prices have gone up and up. Everyone's been looking for a safe haven. But of course, what happens when you get yields this low, effectively negative in real terms? People are forced to go further out on the risk curve. So that's why they get driven into equities. And that's why you're seeing record figures in the stock market. And some of those companies have had great earnings seasons coming out of the banana syndrome and so on. Some have not. It's been very patchy. Some sectors are still struggling. We know about labor shortages. We know about supply chain issues. We know about the chip shortage that's making secondhand cars more expensive because you can't get new ones. So, all that stuff's going on in the supply chain. Central banks believe it's all transitory and that it'll all get sorted out in time. But some of these things, like commodity prices and so on, you can't switch these mines or these factories and so on and off like a light switch. So there could be a long lead time for certain sectors before these supply chain issues are dealt with. And also looking at the geopolitical sector, geopolitical space, what about things like China? Do we still want all of our manufacturing done in a country that is so against the West and is so clearly re-establishing communism as the core kind of political philosophy after 40 years of almost unbridled capitalism? They're very much looking inward, looking in on themselves, destroying several industries from an investor point of view, holding up a great big V sign to foreign investors. And again, what's in your portfolio? Have you got exposure to that kind of geopolitical risk, as well as to the government bond risk that we're talking about here? So I think you've got to be really on top of what is in your underlying portfolio. It could be in some sort of general managed pension fund. It could be in something that you've invested in yourself as a wide-ranging fund. It could be what your IFA has put you into. But find out what your exposure is to bonds, because the chances are bond prices are going to go down from here as interest rates start going up, as inflation continues. It's obviously not transient. This is a very fragile time to be invested in bonds. And if you watch my interview with the value fund manager, Tim Price, he was saying he is completely out of bonds in his £250 million price value partners fund. So, it looks to me like the smart money is very clearly saying, stay away from bonds at this point in the cycle. The question I have for you is, do you know whether you're even in bonds or not? If not, find out and make some changes. So sadly, that's not the end of the madness in this week's episode. Joe Biden is clearly caving in to the most radical left-wing elements of the Democratic Party. We'll talk in a moment about his infrastructure bill, which has finally passed. But I think far more worrying than that is that he has gone ahead with proposing this woman, this Cornell law professor, Saul Omarova, to head up the Office of the Comptroller of the Currency, which is a kind of a regulator of the big banks in America. Now, she has been somewhat controversial, and some of her proposals are incredibly radical, to the point of, I would say, well, it's something that you'd be surprised to see in Beijing. To see this in America, it does signal to me pretty much the end of capitalism, and I think in some ways the end of America. I've said before that I think this decade will see the American empire go into a significant decline, and it looks like China and perhaps India will be the ones that will really take over the 21st century. But talk about accelerating its demise. The appointment of this woman is shocking. I mean, she wrote a 69-page paper which has set out her plans and her ideas for how she wants to change the banking and financial system in America. It is more radical than anything I've seen in my lifetime. And I do believe, if I was an American, I would be heading for the door faster than you can say Omarova. These are her serious proposals, and she is going to be the head regulator of banking in America. She wants to move all commercial bank deposits from the commercial banks to so-called Fed accounts at the Federal Reserve. So remember what I said about Rishi Sunak's central bank digital currencies? You would have, not only would they be issued by the Bank of England, your account would be with the Bank of England. That's exactly what she wants to do in America. So your Barclays bank account would suddenly become a Bank of England bank account, directly under the control of the central bank. She wants 5,000 American banks to hand over their deposits to the Federal Reserve. Just take a second for that to sink in. So the entire banking system gets destroyed. All account balances, everything you've got, everything your company's got, everything your property portfolio's got, gets transferred to the central bank, away from your chosen bank. Then she says, the Fed, in quotes, extreme and rare circumstances when it's unable to control inflation by raising interest rates, the Federal Reserve can confiscate deposits from these Fed accounts in order to tighten monetary policy. This is Cyprus all over again. So suddenly you'd find that you've had a haircut, that 100,000, a million has been taken out of your account without your permission by the government through the Federal Reserve because they want to tighten monetary policy. I remind you, this is President Biden's new nominee to head up the regulation of the banking system in America. She wants all those accounts to come under the Fed's control, and then she wants the Fed to have the authority, without any say-so from you, the account holder, to confiscate your deposits if they think they need to do that to control monetary policy. I mean, I can't, is that socialist? Is that communist? Is it just theft? I mean, what is this? This is a serious proposal. She wants to allow the Fed, where there are rises in market value at rates suggestive of a bubble, such as with the tech stocks, the FANGs, we all know them. She wants the Fed to be able to short those shares, putting downward pressure on their prices. So you're operating a commercial enterprise. You're doing very, very well. Everyone wants to buy into your company. The Fed, i.e. the government, can decide you're doing too well. You're being too successful. So what the government will do is short your company's shares. In other words, bet that they're going to go down in price to put a huge downward pressure on them so that your price goes down, your wealth goes down. If you're an investor in that company, your wealth goes down through deliberate government action. So you've got a central bank account with the Fed. They now have the right to steal your funds at any time they declare fit. And if you invest in something that's doing rather well and they decide it's too well, they will short that stock to deliberately rob you of your wealth and rob that company of its success. And of course, one of the things that you have, at least in the banking system, although it's never really been tested, is this insurance cover for your deposits. Remember that? In America, it's called FDIC, and here it's called the, I can't remember the name off the top of my head, it's got some acronym. She wants to eliminate that deposit insurance. So not only does she want to give you a central bank account, she wants the right to take away your money. And of course, I guess because they've now got that right, they don't want to have to pay it out through insurance. So let's cancel the insurance on your bank account. And we'll also have the right to short the shares of companies that are too successful. So I almost feel like you're going to believe that I'm making this up, but it's all out there. I mean, I'm struggling. I got this from a site called Wall Street on Parade, if you want to look at it just to prove it actually does exist. And of course, like all regulators, she wants complete and utter power. So she wants all bank regulatory functions to be under her control at the OCC. So this is the serious position in America, but it actually is worse than that. She actually was filmed in a documentary a few years ago talking about the banking sector. And this is what she said, and I'm quoting: "The financial services industry, in my view, and I don't think I'm alone here, is a quintessential arsehole industry. But when you think about the pervasiveness of systematically type arsehole behavior in a particular social venue, for example, the financial services industry, then the problem of managing arseholes becomes a structural problem in which the law can potentially have a lot of say. So if we make certain types of arsehole behavior systematically unprofitable, for example, irrational, something that's not rewarding, then that behavior will naturally kind of fall away. And overall, the system will become less prone to being overtaken by a bunch of arseholes that continue to pursue their own private goals, their own insatiable appetites for private gain at the expense of the rest of us." Sound like something out of a communist manifesto? The rest of society. So, this is quite incredible. I mean, this woman who says things like that about the sector she's about to be in charge of, who proposes these kind of changes. What was Joe Biden thinking? There have been questions about his judgment and whether, age is taking its toll on him. You have to think, that I think there are 50 or 60 different left-wing groups who love this woman, of course, and they love her attitude and they love her approach on all things. So she's really kind of on trend with the most radical left-wing part of the party, and he's given into that. And I'm seeing lots of quotes from Americans saying, "Look, Joe, we elected you to stop the madness that was going on in the White House, not to create new madness in the other direction." But it seems that this is the serious proposal. Now, I would have thought there's a simple answer here, which is to simply revive the Glass-Steagall Act, I think it's called. It was in place from the 1930s to the 1990s. I think it was Bill Clinton that got rid of it. But that simply said that you cannot be a kind of investment bank, casino quotes, if you're also a bank that offers these federally insured deposits. And it's the mixture of the two that can end up causing the problem where the taxpayer has to bail out a bank that's made bad investments and cover the losses to the investors of that bank through the federal insurance policy. Now, that obviously you can see why they want to separate that out. And that act was in place for more than 60 years. You'd have thought something like a return to that made more sense than these proposals. But in case it's got past you, let me just reiterate what this does apart. Well, there's two main things this does. One, it gives all the control back, as I said before, to the government, because the central bank, the Fed will do exactly what the politicians say. So just like in this country. So all the control of your account now would rest with them. They are giving themselves the right to take your money and the right to short companies you might invest in, and they're taking away the insurance of those deposits. So how many people would like to have a bank account in America under the terms that are being proposed here? And of course, one of the people that will be watching this carefully will be Rishi Sunak and his little working group as they come up with the Britcoin. So don't imagine for one moment that if this all gets done in America, it ain't going to happen somewhere else. But this is, I think, one of the most shocking things I've seen in living memory. And it's happening today in America as we speak. Also in America, Joe Biden has finally, after months of wrangling, got his infrastructure bill through. As you can see, the Senate vote here, he actually had 6 Democrats vote against him, which meant he needed the support of 13 Republicans to get it through. And it scraped through, as you can see there. So this is, I think, about 1.2, $1.3 trillion. That's 1,200 billion dollars. If somebody would like to count that out for me on the table, I'd be grateful. So I mean, fair enough. This is a long overdue. If you've driven on America's freeways or you've landed at American airports, you'll know how badly they do need to invest in this infrastructure. You can't believe how appalling it is for what's supposed to be the world superpower. So there's no doubt the money needs to be spent. But I think what's significant to me here is that any talk of inflation being transitory, when you're seeing the amount of money printing that's going to be needed to fund this, because let's not kid ourselves, there's not $1.3 trillion sitting in some bank account waiting for Joe to start writing the checks. This is new funny money from the world's most indebted nation. I don't know, I think is it 23 trillion they owe now? Does it matter? So this is going to mean more inflation. It's going to mean, I think, eventually it's going to have to mean interest rate hikes, which is, of course, going to hammer the bond market. And don't forget that one of the problems with interest rate hikes is that the obvious victim is bonds, but it can have an impact in the stock market as well, because what it can do is it can reduce the value of perceived future income flows. So if interest rates are going up, sometimes growth stocks, the FANGs of this world, can be impacted negatively by that, because they perceive that then they're going to be effectively giving off a lower amount of income in the future, and therefore the prices may come down there. So I suspect one of the upshots of all this is that the passive investing strategy, the tracker fund, the index tracker, let's track the tech stocks of America kind of investment decision, which has been a brilliant one in the last decade, I'm highly doubtful that that's going to work so well in the coming decade, because of these kinds of pressures. If you add in geopolitical risk, inflation risk, interest rate risk, continued currency debasement risk, my suspicion is that we're going to have to get smarter at the sectors that we select, and maybe even the individual companies within those sectors, if we want to start seeing real alpha outperformance. There are many people still thinking we're going to see a significant crash in the stock market soon. We've had a very long running bull market. Whether it's market wide or whether it's sector specific, only time will tell. But certainly it looks like a time to be getting more into the very specific selection of funds, sectors, and stocks, rather than just saying, "Oh, I'm going to take a huge American-wide index and just put money into that." I think we are going to have to get smarter with this. And of course, this is a welcome victory for Joe Biden after some truly terrible weeks. He had his defeat in Virginia, was it? And also, obviously, what I'm now calling Cop-Out 26, where there was just nothing of substance agreed. Everyone had these targets. Did you see? I think it was around, was it coal and fossil fuels, where they just added, everyone's going to get rid of them by 2030 or as early as possible after that date. And once you add on a cop-out like that, it's completely meaningless. And of course, China and Russia didn't even turn up. So you have to wonder, India's saying, oh, we need till 2070. So it wasn't exactly a triumph for young Boris, was it? So we'll see where we are on the whole climate thing over the coming years. But I think you're going to see more spending in America, as it goes more and more to a socialist/communist country. It really is, I think, the end of the old financial system, and it's not even the start of a new one that we would recognize. It feels more like we're going down the route of a real dystopian kind of dictatorship, and we'll see what happens there. But yeah, it's really, really worrying. And the final point I want to talk about this week is equally worrying, and that's this billionaires tax they're proposing. Now, as with many taxes, it starts in a small way. They're saying they're only targeting the 700 richest people in America, billionaires. What is absolutely radical and dangerous about this is that they are saying that billionaires are using the retention of their equity in their companies as a tax dodge. In other words, because they don't sell shares in their company, they don't realize the very large capital gains that have made them billionaires in the first place. And therefore, they don't pay much tax because they hang on to their equity. What the authorities are talking about doing in America now through this billionaire tax is to tax unrealized capital gains. I personally think that is criminal. I do think that would be a crime against citizens, because why should you be forced to either sell or be to pay a tax as if you had sold shares in something that you don't feel ready to do so? I mean, Elon Musk's response was to do this tweet to his followers about whether he should sell shares in order to pay this tax. Now, there's lots of stuff. There's a whole storyline underlying this about how he has some stock options, which he's going to have to pay tax on anyway. So is he just using this as a little bit of a PR stunt? Who knows? I mean, obviously, he's got the money. Tesla shares are, I think, up another 50% in the last month. They are beyond bubble territory. They're just going absolutely bonkers. And then there was an announcement of a big deal with Hertz. So they said, well, actually, that deal hasn't been signed yet. And still the shares go up. I mean, what? I definitely need to smoke something that these Tesla investors are smoking so I can get on their wavelength. But yeah, so the fundamental issue here is not what Musk may or may not be doing. It's the principle. If this tax goes into law, I'm not quite clear whether it's currently already been through the Senate and been passed into law, but if it does, what a dangerous precedent that you can be taxed on unrealized gains. That's like being taxed on income you haven't had yet. That's like saying, I think you're going to earn 200,000 next year, so can I have 60 grand of tax today, please? I think, the answer from most of us would be 2 words. Well, what about this? You're sitting in a, let's say you've got a property portfolio, buy-to-let portfolio with £1 million of equity in it. You're building up, what you're doing here is creating an income stream for your retirement so that, you don't need to be dependent on the state. But you happen to, because you bought well, maybe 10 or 20 years ago, and prices have gone up, mainly, of course, through currency debasement, but that's another whole argument. You're sitting on a paper profit, a paper gain of, let's say, £1 million across 5 buy-to-let flats that you bought 20 years ago. You could end up being asked to pay capital gains tax on that, even though the money is still sitting in those properties. So you would have to either sell one of them or remortgage all of them to pay tens, maybe hundreds of thousands of pounds in tax on unrealized gains. Am I the only one who thinks that's not okay? That seems to me to be the most appalling abuse of power. And yet Just like all the stuff I told you about the federal accounts and the confiscation of your money in the bank and the removal of your insurance, they also want to tax unrealized gains. Now, do you see what I mean about how the system is collapsing around our ears? We should be rioting on the streets about this. This is outrageous. It doesn't matter that it's only 700 billionaires. Every tax in the world started out being targeted at a tiny number of people until it made sense for the politicians to broaden it. It's like, the first state pensions over 100 years ago were paid to people over 70 years of age when the average life expectancy was less than 50. Now, we all have life expectancies in the 80s and 90s, and we're getting these pensions in our 60s, and the government, of course, can't afford them. So there'll be more tax for that. Income tax started at only the very highest levels. Now it's spread to everyone, and soon, if you earn anything above the average wage, you'll be classed as a higher taxpayer, because Rishi has frozen all the tax bands for 5 years. So you're being dragged into ever more tax. So what will happen here is, obviously, it will be introduced to billionaires, and then the principle, the concept of taxing unrealized gains will come down the food chain to the decamillionaires, and then the millionaires, and then the people with 100,000 of net. It just comes down and down and down as they need more and more cash for their various pet projects, of which Biden clearly has many. And of course, Boris has got a few of those as well. So this is another really dangerous development that's happening right now in 2021. And, it's really hard to know where to go from here with some of these things, because you can't defend them. You can only marvel at the minds that are dreaming these things up and wonder what they're going to come up with next. So in conclusion, really tough to make a conclusion from these sort of things, but what have we got? Well, inflation is high, it's rising, and I don't think it's transient. One or two people like Jack Dorsey say we're heading for hyperinflation. I think it's a bit too early to say that. I mean, that would mean like prices in the shops going up 10 times or 100 times. I've got my 50 trillion Zimbabwe dollar note that reminds me of what hyperinflation is. I'm not sure we're there yet, but certainly there's a lot of pent-up inflation in the system. Some are calling it stagflation. They think we'll see rising prices, but slowing growth. And as I can see the argument for that, that's quite possible. We'll see whether that happens. But what I think is indisputable is that the inflation is going to be with us far longer than the central banks would have us believe. And every central bank forecast turns out to be total BS. So, we know that they can't forecast their way out of a paper bag. So I think we know inflation when we see it, and we are certainly seeing it now. I think the central banks will have to become more hawkish. They'll have to do something with interest rates. I know the Bank of England bottled it last month, but I think we're going to see rate rises, if not in Q4 of 2021, certainly in Q1 of next year. And the biggest impact of that will be on bond prices, which is why I'm saying you need to check up what you have in the way of bonds in your portfolio, and it could possibly impact the high growth tech stocks. Taxes. Well, I mean, we've had all the announcements from Rishi Sunak. We've had the NHS levy. We've had the freezing for 5 years. Tax, and now, unrealized capital gains. Wow, that's such a biggie. These are the way the authorities are now thinking. And when you add that to the idea of central bank controlled currencies, where they can remove the insurance, they can haircut your deposit on whim, all of these things are becoming reality today. This is not some futuristic sci-fi movie you're watching. I'm telling you what's happening in the financial system now, and you should be afraid. Growth, yep, there is some growth. There's obviously been a lot of bounce back from banana syndrome, but I think it's patchy, and I think certain sectors are doing well, others are not. So I don't think you can just relax and assume everything's going to grow. Different countries are having different growth rates, different sectors, different companies within sectors. So you've got to get more specific. You've got to do some work here. You've got to do some research to understand what you're currently in, what you need to be in or out of, and what you see going forward as the better opportunities. I don't think this is going to be a decade for lazy, passive investors. We talked about that. Rate rise will hammer growth stocks. Inflation protection assets. What have you got in your portfolio that's going to give you some kind of protection from the inflation that's going on? Gold is an obvious one, maybe silver. Bitcoin, many are seeing as a sort of digital gold and a bit of protection. Real assets generally do better in times of inflation. They preserve their value, whether that's art, classic cars, whether that's your stamp collection, whether that's property. Don't know. Property is very interest rate driven, so be careful in the sense that yes, property is a real brick and mortar asset. So in that sense, it does and has gone up a lot as currencies have been debased and inflation's happened, but also availability and affordability of property depends very much on interest rates. So if interest rates and mortgage rates start rising, you'd have to assume there'd be some kind of cooling in the property market, maybe not a crash, but I'd have thought at least a cooling off. I do believe stock selection will be more important than passive index investing this decade, which means, as I say, you've got to do more research and more work. But overall, my conclusion from all this is that the lunatics have taken over the asylum. I really don't know what we can do. We've just got to take control of our financial future if we haven't already. We've got to have a plan B. If I was in America now, I'd certainly be working very hard on my plan B, even though there are punitive exit taxes if you want to take wealth out the country. And they do have, along with Eritrea, this worldwide tax system that is follows you wherever you go. But it's definitely time to be in charge of your portfolio, to know in detail what's in there, and to make a series of decisions on whether it's right for the future, and even to the point of whether your current country, your current tax regime, your current banking system is going to be fit for purpose as the lunatics take over the asylum. Thank you very much for watching. I very much hope you found that useful, and I will see you again soon on the next Renegade Investor Report.